Hello and welcome to this session. In this session, you will learn about exchanges and indices. We will then cover specific indices from various parts of the world, including Southeast Asian indices, European indices, US indices, and Middle East indices. Let's begin with exchanges. An exchange is a highly organized association or institution which hosts a market where financial instruments like stocks, bonds, futures, and options and commodities are traded. Trading takes place on all business days. Buyers and sellers come together to trade during specific hours on business days. Exchanges give companies, governments, and other groups a platform to sell securities to the investing public. An exchange may be a physical location where traders meet to conduct business, or an electronic platform. Exchanges impose rules and regulations on the firms and brokers that are involved with them. Each exchange will have certain listing requirements for any company or group that wishes to offer securities for trading. Now that you know what is an exchange, let's take a look at the types of exchanges. There are four types, namely stock exchange or securities exchange, commodity exchange, foreign exchange market, and futures exchange. Generally, the origin of the stock exchange is traced back to the stock exchange in Antwerp, going as far back as 1460. Amsterdam Stock Exchange is considered as the oldest stock exchange in the world. This was established in 1602 by the Dutch East India Company that issued the first shares on the Amsterdam Stock Exchange. The company was the first in issuing stocks and bonds to the general public. It was later renamed as Amsterdam Bourse and was the first to begin trading in securities. It merged on 22nd September 2000 with the Brussels Stock Exchange and the Paris Stock Exchange to form Euronext and is now known as Euronext Amsterdam. The Amsterdam Stock Exchange trades equities, exchange traded funds, bonds, and derivatives. The AEX index lists the top 25 most actively traded stocks of Dutch companies that trade on Euronext Amsterdam, which has a total of 144 companies listed. Its market capitalization was around 458 billion euros as of December 2011. Now moving on to New York Stock Exchange, also known as NYSE. Now NYSE is considered to be the largest stock exchange till date. NYSE is an American stock exchange located in Wall Street. It had a market capitalization of $16.6 trillion in February 2015. The average daily trading value was approximately $169 billion in 2013. And there are a total of 2,800 companies listed on NYSE. Well, coming closer to home, let's now take a look at the Bombay Stock Exchange, or also known as BSE. BSE is the first Asian stock exchange. It was established in 1875 and is located at Mumbai, Maharashtra. More than 5,000 companies are listed on the BSE, which is also the oldest exchange in Asia. In 1995, the BSE switched from an open flow to an electronic trading system. This automated screen-based trading platform called BSE Online Trading, or BOLT, had a capacity of 8 million orders per day. Securities listed by the BSE include stocks, stock futures and stock options, index futures and index options, and weekly options. The BSE's overall performance is measured by the Sensex, which is an index of 30 of the BSE's largest stocks covering 12 sectors. The Bombay Stock Exchange is the world's 10th largest stock market by market capitalization, valued at $1.7 trillion as of January 2015. The BSE also provides depository services through its Central Depository Services Limited, or also known as CDSL arm. Now that you know about exchanges, we will now cover indices. An index is a numerical measure of the changes in a portfolio of stocks, representing a portion of the overall market. It would be too difficult to track every single security trading in the market. In order to keep track of the performance of financial markets, an index is an imaginary portfolio of securities representing a particular market or a portion of it. Each index has its own calculation methodology and is usually expressed in terms of a change from a base value. Thus, the percentage change is more important than the actual numeric value. Stock and bond market indices are used to construct index mutual funds and exchange traded funds, which is also known as ETFs, whose portfolios mirror the components of the index. It allows investors to invest in securities representing broad market segments or the total market. Coming on the uses on indices, they recognize the broad trends in the market. They are used as a benchmark for evaluating the investor's portfolio, and they also allocate funds rationally among stocks. Coming to the role of stock indices, it is generally used by the technical analyst to predict the future market. Next, it is used to study the historical performance of the indices to predict the future movement. Stock indices are a convenient way of keeping track of the whole market. They also create provision for assigning weights to different stocks on the basis of their importance. Let's look at the types of weighted index. They include price weighted index, capitalization weighted, and weighted equal. Let's come to the first one, which is also known as price weighted, DJIA. The weight of each stock in the index depends on the price of the stock. The next one, capitalization weighted, S&P 500. The weights depend on the capitalization or the size of the company. The greater the market cap of the stock, the greater its weight. Finally, we have equal weighted, Wilshire 5000. Each company is equally weighted. Thus, the index consists of 100 stocks. Then, the weight of each stock is 1%. Let's take a look at price weighted index. In price weighted index, the weight of each stock is the ratio of its price to the sum of the prices of all stocks that are included in the index. This is equivalent to stating that we buy one share of each stock in the index. Let's take an example. Suppose the index comprises only of two stocks, KO and PEP. If price of KO is 45 and the price of PEP is 50, then the weight of KO will be 45 divided by 45 plus 50, which comes to 0.474, and the weight of PEP is 0.526. The most famous example of a price-weighted index is the Dow Jones Industrial Average, also known as DJIA. However, there are two main challenges to be considered while constructing a price-weighted index: splits or stock dividends, change in the composition of the index. Now we'll explore capital weighted index. In capital weighted index, the weight of each stock is the ratio of its market cap to the total market cap of the index. Let's take the example of S&P 500 for the date of 2nd Jan 2002. Market cap of all stocks $10.526 trillion. Market cap of the largest stock GE $406 billion. Therefore, the weight of GE in the S&P 500 is 406 divided by 10,526, which comes to 3.86%. Market cap of the smallest stock, which is US Airways, was $429 million. Therefore, the weight of U in the S&P 500 is 0.429 divided by 10,526, which comes to 0.0041%. In a cap weighted index, much of the movements of the index will be determined by price movements in the largest stocks. Price movements in the smallest stocks in the index will typically have negligible effect on the index. Moving on to equal weighted index. In equal weighted index, the weight of each stock in the index is the same. Thus, if there are n stocks, the weight of each stock is 1 by n. Thus, if there are 100 stocks in the index, the weight of each stock will be 0.01. Example: if you construct an equal weighted index of two stocks, KO and PEP, the weight of both KO and PEP will be 0.5. The problem with equal weighted indices is that it is difficult to replicate with a real stock portfolio, as every stock price movement leads to the portfolio having to be rebalanced. Example: suppose you have an equal weighted portfolio of two stocks, KO and PEP. Assume you invest a total of $100 with $50 in each of these two stocks. Now KO increases in price by 10%, while PEP remains the same. Your investment in KO is now $55, while your investment in PEP is still $50. To make your investment in KO and PEP equal, you will have to sell $2.5 of KO stock and use that money to buy $2.5 of PEP stock. Let's now focus on the different indices. With a few exceptions, notably the Dow, Most indices are now capitalization weighted, including the S&P 500 and almost all the Wilshire indices. Thus, the differences between indices are largely due to the differences in the stocks that comprise the index. Over time, many different indices have been introduced to represent different subsets of the markets. For example, indices have been constructed to represent companies of different sizes, large, mid-cap, small, or that fall into different style categories: value versus growth, or different industry sectors, utilities, internet, etc. Finally, let us learn about the various popular indices around the world. Moving on to the Dow Jones Industrial Average, known as DJIA. It was first started by Charles Dow in 1896. The number of stocks are 30. The composition does not change very frequently. In particular, the DJIA included Microsoft and Intel into the index only on November 1st, 1999. However, the divisor used to calculate the index level has often changed over time. The current divisor is 0.1445. Now that we have covered the DJIA, let's learn about the Standards and Poor's 500, that is S&P 500. The S&P 500 is probably the second most famous index after the Dow. Its market impact is definitely greater than the Dow, as about $700 billion of index funds are directly tied to this index. S&P 500 includes 500 US stocks chosen by the S&P Index Committee. The weights are determined by market capitalization. The total market value as of 1st February 2002 was $10.527 trillion. The 10 largest firms had a combined weight of 24.94% as of January 2002 and 23% as of November 1999. The bottom 250 firms had a combined weight of 10.47% and 8.32% as on November 99. The total weight in the 19 firms with market caps of less than $1.5 billion is 0.19%. The total weight of firms below $2 billion is 0.54%, and which is 38 firms. The weighted average market capitalization is $107 billion. Thus, much of the movements in the S&P 500 is determined by the large firms, in particular by large growth stocks. Now we are going to study about the Wilshire 5000 index. The Wilshire 5000 is a very broad total market index. It was created in 1974 with data from 1971. The number of stocks in the Wilshire 5000 are 6,500 stocks of the about 12,000 US public firms. The weights are determined by market capitalization. Earlier, it also had an equal weighted index. The total market value as on 31st December 1999 was $15.8 trillion. The percentage of total US capitalization is almost 100%. Because of its breadth, the Wilshire has a much higher weight on companies with small capitalization as compared with the S&P 500. About 10% of the index is in small capitalization companies as compared with less than 0.5% for the S&P 500. Now let's move on to BSE Sensex. The BSE Sensex, also called the BSE 30 or simply the Sensex, is a free float market capitalization weighted stock market index of 30 well-established and financially sound companies listed on the Bombay Stock Exchange. The 30 component companies, which are some of the largest and most actively traded stocks, are representatives of various industrial sectors of the Indian economy. Published since 1st January 1986, the Sensex is regarded as a pulse of the domestic stock markets in India. The base value of the Sensex is taken as 100 on April 1st, 1979 and its base year as 1978-79. On 25th of July 2001, BSE launched Dolex 30, a dollar-linked version of Sensex. As of 21st April 2011, the market capitalization of Sensex was about 29,733 billion rupees or $538 billion, which is 42.34% of market capitalization of BSE, while its free float market capitalization was 15,690 billion or $284 billion. Sensex is calculated based on a free float capitalization method. In free float method, the market capital is not calculated using the total outstanding shares, but shares that are readily available for trading. As per free float capitalization methodology, the level of index at any point of time reflects the free float market value of 30 component stocks relative to a base period. Calculation of Sensex value. Current free float market value of constituent stocks divided by index divisor. The index divisor is nothing but the present level of index. Now, going forward, there are many indices of BSE, which are BSE Sensex, also called Sensex BY, BSE Mid Cap Index, also called BSE Mid Cap BY. Next is BSE Small Cap Index, also called BSE SML CFP and BY. BSE 100 Index, also called BSE 100 BY. BSE 200 Index, also called BSE 200 BY. DOLX 30, which is called DOL 30 BY. DOLX 100, also called DOL 100 BY. DOLX 200, also called DOL 200 BY. BSE Tech Index, also called BSE Tech BY, and BSE PSU Index, called as BSE PSU BY, Bombay Stock Exchange BSE. Let us now examine the difference between BSE and Sensex. BSE is an exchange where the companies are listed. It is a market for equities, bonds, derivatives, etc. of its listed companies. Being an exchange, it is subject to all the rules and regulation imposed by SEBI and also securities related norms of RBI. Sensex, on the other hand, is BSE's index. It is a compiled indicative number of 30 selected companies which represent the performance of entire BSE market. It is the calculated number based on free float method of capitalization. Let us now learn about National Stock Exchange, also called as NSE. The National Stock Exchange is India's largest financial market. Established in 1992, the NSE has developed into a sophisticated electronic market which ranks third in the world for transacted volume. NSE was set up by a group of leading Indian financial institutions at the behest of the Government of India to bring transparency to the Indian capital market. More than 1600 companies are listed on NSE. It is based in Mumbai, India, and the National Stock Exchange is a leader in market technology. NSE implemented the first electronic limit order book to trade derivatives and ETFs. NSE has a market capitalization of more than $1.65 trillion, making it the world's 12th largest stock exchange as of January 2015. The CNX Nifty, the 50 stock index, is one of the trusted indices for investors globally. NSE offers trading clearing and settlement services in equity, equity derivatives, debt and currency derivatives segment. It deals in equities, indices, exchange traded funds, IPO, security lending and borrowing, bonds and derivatives. Nifty is a major stock index in India introduced by the National Stock Exchange. Nifty was coined from the two words national and 50. The word 50 is used because the index consists of 50 actively traded stocks from various sectors. The base year is taken as 1995. Base value is set to 1000 and calculated on 50 stocks actively traded in the NSE. 50 top stocks are selected from 24 sectors. Nifty is owned and managed by India Index Services and Products Limited, also known as IISL, which is a joint venture between NSE and CRISIL. CRISIL is Credit Rating and Information Services of India Limited. The S&P CNX Nifty stocks represent about 65% of the total float adjusted market capitalization of the National Stock Exchange. Now moving on to the NSE indices. The different types of NSE indices are CNX Auto Index, CNX Bank Index, CNX Energy Index, CNX Finance Index, CNX FMCG Index, CNX IT Index, CNX Media Index, CNX Metal Index, CNX Pharma Index, CNX PSU Bank Index, CNX Realty Index, and IISL CNX Industry Indices. Moving on to the key indices around the world. Here is a table showing Southeast Asian indices. It shows the indices city, market capitalization, number of stocks, and the method of calculation. For example, the index 𝒂𝒏𝒕 from South Korea has a market capitalization of $1.2 trillion and the number of stocks are 200. Here is a table showing European indices. For example, the index DAX located in Frankfurt has a market capitalization of $1.2 trillion and the number of stocks are 30. Now moving on to US indices. For example, the index Dow Jones Industrial Average is located in New York, having a market capitalization of $2.5 trillion. The number of stocks are 30. S&P 500 is another index and the number of stocks are 30. Now here is a table showing Middle East indexes. For example, the index Tadawul has a market capitalization of $0.5 trillion and the number of stocks are 169. That's all for now. We hope you found the session useful. Thank you and goodbye.